In today's video, I want to take a look back at some of the predictions that I've made in the past several years. This is the semiconductor index. I told people 3, even 4 years ago, this was forming a huge base, and that when price finally broke out of that base on a sustained basis, it was going to produce a huge move. And we can see it's in the process of that right now. I still don't see anything in the stock market that would convince me that we're at the top of a bubble yet. I'll show the NASDAQ here in a minute. But you can see we got our several attempts to try and break through that all-time high back in early 2018. Then we finally get a sustained move out of that, and then into the this was of course right after the election, into this top, and then we come back down to retest that breakout. That's not unusual, and it set the stage for this huge move up. And as I said, I don't see anything yet that would convince me that we're at the top of the bubble. So I don't think it's inconceivable at all that the semis could double again from here to 6,000 or higher. This is a massive base, and we're getting the very strong, powerful move out of that base that I predicted was going to happen. But I think we still have probably a long ways to go, and we may do it in a very short amount of time before we get a bubble top. All right, moving on to the NASDAQ, we got the same thing, and many of you know that I've been predicting for at least mid-2017 that 10,000 was going to be a piece of cake in the NASDAQ, and we would have at least a decent shot of even making it to 20,000. Of course, nobody believed me back then, and I got lots of, especially when we had this correction here, lots of comments that I was wrong, that the bull market was over and we were never going to see 10,000, and now of course we're 40% above 10,000, and we're not done yet. So let me shorten this chart just a little bit. All right, so I'm seeing people telling me that the bubble is not going to occur in the NASDAQ, and that is just wrong. It is going to occur in the NASDAQ. That's where the speculation is at. That's where the excess is at. Same as it was in 2000. The same as it is in every bubble. The bubbles occur where the story is at. The big paradigm shift, and it starts out as being fundamentally true. The problem is that if it goes on long enough, then human emotions and greed take over, and governments usually keep interest rates too low too long. Does that sound familiar? They print too much money. Does that sound familiar? And in the end, it causes a bubble that is completely, way far beyond any fundamental driver, and is just funded by easy money and human emotions of greed. So this is what needs to happen. So the bubble is not, the market is not topping here. We're consolidating, same as we were right here. Price got stretched a little far above the 200-day moving average, had to go sideways for a while and give the 200-day moving average some time to catch up. Once it did, then we get another big strong trending move. We're getting another sideways consolidation, giving that 200-day moving average some time to catch up to price. But we don't have that insane parabolic move that would indicate that we're in the very final innings of a bubble. But I think we're close. I think once we get a sustained breakout above 14,000 here, I think we're on our way to the final bubble top. And as I've mentioned before, once you get the slingshot down, then the bubble phase tends to last about a year to a year and a half. That's about how long it takes for every Tom, Dick, and Harry to finally catch on and then jump into the market uh, under the illusion that they're going to get rich quick when there's no risk, and uh, and this is where they're going to make their fortunes. And every idiot makes a fortune during a bubble. The problem is that almost every idiot holds on too long and they get caught in the crash and they end up losing everything. But there's nothing here yet that would tell me that we're getting, that we're not in that final insane parabolic move that stretches price, way, way above the long-term moving average. And in this case, I'm using the 200-day moving average. So I think that's probably coming. We're getting late. We're now over a year into the move out of the slingshot. So at most, I think we've got 5 to 6 months left. So I think we're setting up for that final melt up parabolic phase that sends us to that bubble top. My guess is it's probably going to come in August or September, the top will, and then we'll have the crash will probably start. Most crashes start in the fall. So October, November is when we get our first crash off that top. We'll get a rebound, maybe a double top, and then we'll start a bear market in earnest. And somewhere here, there's going to be another volatility event, guaranteed. I warned people there was going to be a volatility event, and we're kind of still in it in tech, even though the S&P and the Dow have kind of left that volatility event behind. But again, the bubble's going to occur in tech. So we're still working our way through this volatility event, aka sideways consolidation. Once that's done, I think we start the sustained breakout above 14,000. And then somewhere here, maybe at 17, maybe at 18,000, we're going to get another volatility event. It'll be worse than this one, I think. Bigger corrections, more percentage-wise. They'll happen quicker. It'll be scarier. And then once that's done, then I think we get that final few weeks into the bubble top, and then the crash probably sometime this fall. And now let's take a look at gold, and the same principle applies. The longer the base, the higher in space. You see, or I showed you what is progressing in the semis. The same thing is going to happen in gold. And I'm getting the same kind of comments. I got those comments in here when I said that the bear market was over and gold was starting a bull market. People told me I was wrong. Of course, I was not wrong. Gold broke out and made another high, but this is frustrating the novice, impatient traders, and they're giving up because they never bother to step back and look at the long-term charts. They're stuck watching the daily charts, or in many cases, the minute-by-minute charts, and the manipulation by the banking cartel is frustrating, and so they get frustrated and impatient, and they sell when they should be buying, and gold is doing nothing wrong at this time, and it is in the process of, I think, of breaking out of this handle of this cup and handle pattern. And it's just, as I warn people, it's going to be a difficult process. The banking cartel is going to fight this. They fought and fought and fought to keep gold below 1,800. But I told you that gold was going to break out. It was going to defeat that manipulation, and it did this week. There is I guess you would call it the handle trend line from this peak through this pivot. That's probably going to be tested next week, and the cartel is going to fight tooth and nails to stop that from breaking. So we're probably not going to get through that yet, and that's why I keep telling people the big momentum, the real momentum in gold and silver is probably still another 2 or 3 weeks away. We got to break through this trend line first, and then we're going to have to get through this 2011 high. Remember, I told people here that this breakout was coming too late in the intermediate cycle to be sustained. It's exactly what happened. We started the handle um, consolidation. And this was helped along, like I said, the banking cartel had a lot of shorts they had to get out of, so probably ended naturally right here, and then the cartel manipulated gold a little lower, got out of more shorts. They've still got shorts in gold, not nearly as many as they did up here. They've still got quite a few in silver they need to try and exit, but gold is in the process of breaking that manipulation, and um, we're coming to an end of an era, I think, where the banks can control the metals market. I think that is ending. Now, let me shrink this chart just a little bit too. So basically, the takeaway here is, again, the bigger the base, the higher in space. So once we get a sustained breakout of this peak, there's no telling how far gold is going to go. 7 or 8,000, I think, is a piece of cake, and it may go way above that, much further than any of us can imagine at this time. I suspect almost no one believed me when I said that the breakout from the semis was going to produce a huge, gigantic move, but it is, and the same thing is going to happen when this breakout from this base occurs, and maybe even more so. Gold is a much thinner market than stocks, so it doesn't take anywhere near as much money to move gold higher. So the potential is for a much larger percentage move from this 11-year breakout than the 20-year breakout in semis. All right, so I'm going to shrink this down to the daily chart. Here is this handle downtrend line. I guarantee you the cartel is going to fight tooth and nails next week to prevent this from breaking out. This is also going to be that resistance level at 1850. You can see how this was support here when it broke, then recovered, and then kind of resistance here. So this is a big potential resistance level at this trend line and at this 1850 zone. The cartel is going to try and stop gold there. They are not going to succeed, just like they did not succeed in holding gold below 1800. But it's going to stop the momentum for a while, maybe for a week, maybe for two. But it is not going to stop the bull market. All the manipulation, all it's going to do is just create a much more aggressive and larger move in the end when the manipulation finally breaks. And it is going to break. It already broke here at 1800. It's going to break at 1850 as well. And ultimately, that gigantic base that I showed you is going to produce a huge, huge move in the years ahead. But I've watched as impatient traders have given up. Many of them gave up here. Many of them gave up here. A lot of them are giving up. Quite a few gave up over the last couple of weeks as gold was pinned below 1800. And of course, they were now out of the market and they missed the breakout above it. They didn't listen to me, or they didn't believe me that that gold was going to break that banking cartel manipulation. And so they got frustrated and they sell and they're out. And then of course then they miss the move when the breakout comes. Same thing's going to happen probably next week and the week after. Gold's probably going to struggle to get through this. The cartel's going to knock gold back down. They're going to probably do everything they can to keep it from breaking this trend line. People are going to give up. They're going to sell, and then they're going to be on the sidelines again when the breakout does occur. And this is just what happens with novice, amateur, impatient type traders. They just don't, they don't look at the big picture. So I try to stress for all my subscribers, at least once a week, you need to back out to the yearly charts, look at the big picture so you can see what's going on, and you don't get lost in the daily wiggles or the hourly wiggles or the 5-minute wiggles, in a day trading mindset, and then you miss the big moves which occur over time. And And right now we're setting up for a really big, strong trending move in the metals, but we may be stuck another week or two um, as gold tries to break free of the banking cartel and break through this trend line. So now is not the time to get frustrated. Now is the time to exercise some patience. The momentum is coming, but it may still be another couple weeks away before it starts.